Hey everyone, welcome back to Swing Trading 101. We're going to continue breaking down everything. I'm lead trainer with Stocks to Trade, Tim Bowen. We're going to work through the worksheet part 2, the second half of the worksheet. Hopefully, you've already gone to stockstotrade.com/free training and you have the worksheet. If you haven't, maybe pause the video, hit the link below, or go to the link and check it out. Drop your email in. You get a free watch list, you get a free worksheet, and you get access to all of the archive of the other mini courses I've been doing. It's a great win-win across the board. All right, picking up where we left off, we're now going to move on to a little bit more kind of fundamental type things. So you'll hear me talk about this a lot with these swing trades. We really want to look for higher quality stocks. And the reason I do the air quotes is we still want to trade momentum speculative companies, okay? So the whole idea behind the air quotes is typically these aren't going to be the Apples, the Microsofts, you know, the Amazons, you know, some of the most profitable companies in the world. And the reason we do that is the market cap on those stocks is so large, so big that they just, you know, it's like an aircraft carrier. You know, they talk about trying to, you know, turn an aircraft carrier. Well, it takes 10 square miles to turn an aircraft carrier. What we want to do is kind of balance between the aircraft carrier and the wild jet ski. You know, if you've ever been around people jet skiing, especially if they got a couple drinks into them, it's bad. They fly everywhere. But anyway, we're trying to combine a little bit of both to maximize our potential reward without taking the crazy risks. So we act unlike day trading. If you check out the day trading course, very seldom did I even talk about anything fundamental because we're just talking about mania, madness, hot sectors. So now when we're talking swing trading, we want something that, you know, the media, that hedge funds, that your grandpa, your dad, your uncle can get behind, because we need buyers, you know, and listen, at the end of the day, most, you know, people that that are more risk averse want nothing to do with penny stocks. And that's why they make the wild moves, because it's mostly crazy people that are trading them with no risk management. Watch the day trading course, I'll help you out with that. But what we like about these, with a little more fundamental data, we can attract some of those real buyers, whether it be pensions, hedge funds, your dad, your uncle, etc. So next criteria we're looking at, is it a good company? And again, notice that's in quotes. What we typically look for to consider it a good company is we're looking at sales and profits, okay? And you can see DATS, we're continuing this from the last video. DATS is the ticker we're focusing on. You know, they have, I scanned by it, you know, they're very speculative, no revenue, but the nice thing is they're only losing $1 million, okay? So they're not like bleeding cash, and things are improving. They've got announcements, things are getting better. You know, this First Financials, they just went public, so that's kind of a knock at the end of the day. So here we are working through the worksheet. I'm gonna put a neutral on whether or not this is a good company because they don't have gangbuster profits and sales. So when I do that, I check the box between the yes and the no, which I consider to be a neutral. Now, I'm curious to see this stock in the future. I think they will be profitable next quarter because I've been following this, I've been researching it. So I'm going to give them a neutral. That's not a pro, it's not a con, but I've checked every single other box. Now, depending on when you see this video, you know, it might be a month down the road and they've announced earnings again. If they're posting profits, then you're going to check that box, which probably sends the stock higher, by the way. Next, is it a good and or hot sector? If you remember from the last video, we did touch on that a lot. It's blockchain related, it's social media related, it's an IPO. So again, that's almost a double checkbox on the good/hot sector. Next thing we're gonna look for is back to a technical idea. Is there a whole dollar, half dollar break? Yes at 9. But then let's fast forward to today. I don't want to talk about necessarily the past. We also broke 14 today. So let me show you. Yeah, if you go to my screen, you can see that that this stock broke 12, broke 13, and also broke 14 and almost touched 15. So now I'm going to look at those whole dollar, half dollar areas of, say, 15 going into tomorrow, and probably risk off of 14, the area the stock is trading at. That would give me a goal of 18, a 3-to-1 risk to reward. But point is, I have a whole dollar, half dollar. I have a previous 52-week high, today's close, etc. I can stack up all of these key levels to risk off of. And ultimately, let's say this stock trends up tomorrow, it breaks back below 14. You're probably going to see that first red day. You're probably going to see a lot of profit taking. It's not a stock I want to stay in long. So that being said, good signs so far on that whole dollar, half dollar break. Next, we look for the float. We typically like to have a lower float stock, and DATS is exactly that. You can see it's a 14 million float stock, which, you know, we look for anything less than 10 million float is what we consider to be a very speculative low float stock, and we tend to avoid those. Vice versa, we don't like the 200, 300 billion float stocks because you're back to the aircraft carrier. Great mix here. 14, 15 million shares in the float. Nice mix of high potential reward with lower risk. Then I fill out the rest of the stuff. I fill out my support area. Going back to tomorrow, my support area would be 14. That would be my risk area. Then it's a rating of the catalyst. How do I rate that catalyst? You probably heard me as I've worked through the last couple videos. I give this probably an 8 or a 9. Now, you might ask, how do I do that? Comes with experience, data tracking, seeing where these stocks go. But I can tell you, as I've said several times, IPO, blockchain, social media, big breakout, good earnings, a lot of pie in the sky, a lot of true believers in this thing. So I'm not going to give it a 10. I like to hold back on the 10s, but a solid 8 or a 9 when it comes to the catalyst. Then the next thing we're going to do, we're going to fill out the sheet going through. I'm going to look for my good entry. What would I like for an entry? Going back to tomorrow, I'd put 15 in there. I'd look for that dip, that reclaim of 15. Then I'm going to grade my setup. Again, a little bit arbitrary, a little bit unique to you. I'm going to give this an A- just because I'm tough with the A's. Then the last part is actual execution. Where did you enter? What was your goal and what was your stop? Remember, it's not a trade without a stop and a goal, okay? Even if we're talking swing trades, if you don't have a goal, you'll turn winners into losers because you'll overstay. And if you don't have a stop, hey, it's not going to work for you. I don't care what style of trading you use. If you don't have a stop, it's going to get bad and it's going to get worse. And then this also allows you to review at the end of the week, the end of the month, end of the quarter, end of the year, etc., because you can go back through your sheets, see what happened. Usually in the margin, I'll write down the profit and loss, I'll date it, and then I can go back and match this up to my trading records, to my review, and ultimately see, okay, I checked 9 out of 10 boxes on this stock. Basically, the only thing I didn't check was I gave a neutral to the good company. Was this a profitable trade? Answer is yes. Well, I need to look for more of these, okay? Otherwise, or maybe I got 10 of these that worked and one didn't. Again, I need to look for a lot of these. This needs to be my focus because I've found something here. Vice versa, hey, maybe you try it and 9 out of 10 are losers. Well, then that tells you you either need to modify the system or you need to try something else. Use your data to create better results down the road. All right, everyone. Coming up in the next episode, we're going to be talking about the best swing trade pattern for mornings. I like to focus on time of day for a lot of these patterns. And listen, one of the best times to enter these swing trades like a DATS is in the morning. We're going to be breaking that down. If you haven't gone to stockstotrade.com/free training, head over there. You'll get emailed as soon as the video drops. You'll get the worksheet, you'll get the watch list, and we'll see you next time.